title that we've got here is Crypto Market Cap and Trend Line. So why don't you just describe what's going on in this chart?
Yeah, I mean, so this chart basically is just it's the entire cryptocurrency asset class, not just Bitcoin. It looks like Bitcoin, right? But it's
Mm.
actually the market capitalization of the entire asset class. Like if you look on the left, we're currently, at 2.5 trillion, somewhere in that area for the entire asset class. And the whole idea is that, you're going to see some type of like diminishing returns over the long haul. And one way to, encapsulate that trend is using logarithmic regression, where the most insane moves happen early on. Doesn't mean you can't have great moves later. It just means they're going to be slightly diminished in terms of their ROI, and that's sort of what these logarithmic regression trend line more or less encapsulates. And the whole idea is that, look, I mean, we're going to go through periods of overvaluation and undervaluation. We're going to have bull markets and bear markets. And the whole idea is to figure out, well, how far overvalued can we get before we ultimately come back down to earth? And, when I look at this chart, what I think of is I think it looks like we have a long way to go. You can see that if we were to go to the the higher green line, which we've hit 3 times in the past, I mean, we should be able to go several trillion higher than we currently are today. And I generally think that this market cycle, the asset class as a whole, should reach approximately 10 trillion, plus or minus a few trillion. I've often said 7 to 13 trillion is generally where I think it's headed. But you should note that there's not really a good chance we're going to hit 10 trillion this year, right? It would have to we have to just go straight up.
Right.
Which is probably not going to happen going into the next, the final 30 days of the year or so. So that's generally the idea of this chart. You have the fair value logarithmic regression trend line, and then you have sort of the bear markets where we're below the line, the mania phases, the bull markets when we're above the line, and then sometimes we sort of just track the fair value for a while.
Yeah, absolutely. Something that I've heard you talk about a lot, and I really agree with it as well, is this idea of kind of lengthening cycles in general. So we're looking at a graph or at a chart here of ROI versus the days from the bottom, I guess, of various cycles. And you got cycle 1, cycle 2, cycle 3, and cycle 4. If you're an avid listener of On the Margin, this is going to be the third time that you're looking at this chart. Sorry, Ben, I jacked it from you. It was that good. You did get credit. But walk me through kind of what the thought process was for creating this chart and what your thoughts are just about cycles in general in our space.
Yeah, so I think Bitcoin, it goes through these sort of market cycles where every cycle we speculate on something a little bit different. In 2011, it was this this novel concept, of Bitcoin. And obviously through the years, it became the idea that, all right, it's going to be the future peer-to-peer currency. And then in 2017, we were like, all right, maybe it's just a store of value. And then people were also speculating on the ICO craze for Ethereum and whatnot. But even then, every cycle, there's more to speculate on than the last cycle, right? I mean, like 2 cycles ago, we didn't even have Ethereum. Ethereum
Right.
wasn't even around until 2015. So the 2013 cycle, relatively short. The next cycle, it took a while. I mean, it took longer. There's a lot more people coming into space. There was more to speculate on. Now, 99% of those ICOs ended up being scams, right? And I think that, the people realized this, and then we could no longer support the crazy valuations back then. We had to go down for a while. We had to have a bear market. But today it's different. I mean, it's not different in the sense that this time is different, right? It's just it's more of the same. There's more to speculate on this cycle, right? You don't just have worthless ICOs. You have DeFi. DeFi is a huge space. You have NFTs. You have artists, these famous artists that are getting their own fans into the space because they're launching their own NFTs. You have tons of institutional demand for the first time. I mean, Tesla bought $1.5 billion worth of Bitcoin. MicroStrategy bought, and they announced they bought some today. Or at least, I don't know if they bought it today or not, but they bought it sometime recently, and they announced it on Twitter today. So, every cycle, you have more and more to speculate on, right? And you have more people. And it seems like, okay, the cycle is going to keep going on longer, but we also recognize, too, that doesn't mean that you're going to outperform the last cycle, because we do unfortunately see diminishing returns, and that it takes exponentially more volume to continue moving the market cap another 10x, right? Like we can't, and that's why people love betting on micro caps occasionally, because they can much. It's a lot easier for a micro cap to go up 10x than it is for Bitcoin to go up 10x. So the reason I came up with this chart was to basically say, you know what, guys, look, the data suggests the cycles lengthen as you measure them from market cycle bottom. Now, technically, I should say, as measured from this chart, we have not had a lengthened cycle yet. If you look at the purple line, we've gone out further than cycle 3, but the all-time high at 69K actually occurred within about 1 or 2 days of the last cycle. So now you have all these people speculating, well, is the cycle over, right? Is 69K the top? I would argue that's not. I don't think 69K is the market cycle top. I think we have a ways to go. I think if you look at the chart, you would expect lengthening cycles to play out and diminishing returns. In fact, right? You can see diminishing returns and lengthening cycles are just the name of the game.